Hi, my name is Jean Warner and I'm a Senior Talent Acquisition Partner for Webster Bank. Today's webinar is called Navigating Your First Day. There's a saying, it takes a village. Well, our village is called Human Resources. The HR umbrella. There are many teams that comprise Human Resources, and they're all part of the onboarding process of the company's new employees. Each team works together to help the new employee assimilate into the organization. It actually begins before a new employee starts on their first day. It starts with our talent acquisition team. We're the first point of contact that a candidate makes with a company. We provide information such as the culture, what it's like to work for the company, and an overview of the benefits. We keep in touch throughout the interview process, answer any questions they have along the way. We also will verbally extend the offer to the candidate. My job is to walk the candidate through the next steps in the offer/hire process. This includes verbally extending the offer, walking through the details of the offer, sending the offer letter electronically for them to accept. Attached to that letter is the benefit information. We attach it to the offer letter so the candidate can review the information and let us know if they have any questions. If there are any specific questions, we reach out to our benefit partners who will provide us guidance on how to answer the question, or they may contact the new hire directly if it's a more sensitive subject. Shortly after they accept the offer, they'll receive another email with a link to access the new hire paperwork. This includes completing the tax forms, the state and federal. I would suggest sitting down with someone to discuss what to claim on your tax forms. As a company, we're not allowed to provide tax advice to the new employees. You also have to review your personal information for accuracy and update emergency contacts. Review and sign off on company policies, and also completing the Section 1 of our I-9 form. You'll be asked to bring 2 forms of identification to new hire orientation to complete the second section of the I-9. You'll also have information regarding where new hire orientation will be held and the directions to the location. For Webster, benefits aren't selected prior to the start date. Our company benefits start the first of the month following an employee start date. So for example, if a new employee starts anytime this month of October, their benefits will start November 1st. Or if they start in the month of November, their benefits will start on December 1st. For our benefits, you must enroll within 30 days of your initial eligibility date to receive coverage. So if you're hired and you start on the 1st of the month, you have 30 days to complete your new hire benefit enrollment. The next team that is listed under the HR umbrella is our Learning and Talent Management, or training team. They handle new employee orientation. They provide the overview of the company's history, policies, IT orientation, security badge, your clearance for the different locations you'll be working in. They'll go over pay schedule, and they'll go over benefits as well. I mentioned earlier about the 2 forms that need to be brought to new hire orientation. We'll send out a reminder message to new employees to make sure they bring that when they come for orientation. You'll also be shown how to access the benefit portal so employees can make the selection of the plans that they wish to choose. You have, like I said, 30 days to complete this process. Learning Talent Management, also known as training team, are also responsible for helping employees with their professional growth, identifying skills, and navigating career options. They're a great resource to use if you are looking to advance your career within your organization. The next team is our benefits team. They're responsible for ensuring our employees sign up for benefits in a timely manner, answer any specific questions pertaining to one's needs, and maintain the relationships with our vendors. The team also is looking to see how we can stay competitive in the marketplace regarding our benefits. They review our benefits very frequently, and they want to make sure that we're being very competitive out there when it comes to attracting talent to our company. They make sure all the new hire employees have completed their benefits on time. The next team is our HR services. They handle all the employee status changes. They triage incoming requests and monitor the mailbox for employee questions and employment verifications. They make sure all the new hire forms are completed. They're what we call the keeper of the files. And then the last team underneath the umbrella is our HR business partners. They will welcome new hires to the team that they're hired on. They meet with the new employee within their first 30 to 60 days, handle all employee relation questions or issues. They also help the employee with identifying leadership skills, coach them, develop the employees to help motivate them to obtain those goals. So as you can see, all these different departments are underneath the HR umbrella, and that's our village. Your benefits and responsibilities. Company benefits. Companies have different health plans, so it's best to review the information prior to signing up. If you aren't sure of a plan, reach out to the benefit specialist for your company to ask them questions. Do research ahead of time if you're not familiar with terminology such as HSA, which is Health Savings Account, or HDHP, High Deductible Health Plan, or PPO, Preferred Provider Option, and HRA, which is Health Reimbursement Account. You want to make sure that you are making the best decision of which plan best suits you and not what someone else enrolls in or tells you to take. You're committed to that plan until the next open enrollment. If you're covered under your parents' insurance or you have your own health coverage, you can decline the company's health plan, but you'll need to show proof. For new employees who are on their parents' health plan, you're eligible to stay on that plan until you reach the age of 26. Once you turn 26, you'll no longer be eligible to stay on your parents' plan. This is what we call a life event change. You'd be eligible to elect our company's health plan at that time. We show our employees how to log into the benefit portal and select the plan that they choose, and also how to upload the documentation that they need to show that they're no longer on their parents' plan. Deductibles. What are they? A deductible is the amount of money that you pay out of pocket for medical costs before your insurance starts paying. For example, if you have a plan and the deductible is $500, you'll pay the first $500 and insurance will pay any expense after that. Who pays for the plans? Well, healthcare has become increasingly more expensive over the last few years, so a lot of companies have a majority of the benefits shared with the cost shared with the employee. This is done through payroll deduction. So you'll see on your benefit form the cost that you'll be paying and the cost that the company will be paying. The deduction is on a pre-tax basis, so it's not subject to income tax. Now, there are some companies out there that may pay an employee more if they opt out of the company health plans. Webster does not offer this option. I recommend when you're in the interview process that you ask the recruiter or the HR business partner if the company offers this option. So it's never too early to start thinking about retirement. Depending on the company, they may offer multiple plans for an employee to take advantage of. Here's a few. 401k. A 401k plan is a company-sponsored retirement account that employees can contribute to. Employers may also make matching contributions. There are two basic types of 401k, a traditional and a Roth, which differ primarily on how they're taxed. In a traditional 401k, an employee contributions reduce their income taxes for the year they're made, but their withdrawals are taxed. With a Roth, employees make contributions with post-tax income, but can make withdrawals tax-free. The others, a 403b. It resembles a 401k, but they serve employees of public schools and tax-exempt organizations rather than private sector workers. The advantages of a 403B compared to a 401k can include faster vesting of your funds and the ability to make additional catch-up contributions. Investment choices may be more limited than with a 403B. However, with some accounts offer less protection from creditors than 401ks. Employee Stock Purchase Plan, also known as ESPP. It's a program which employees can purchase company stock at a discounted price. Employees contribute through payroll deductions, which build until the purchase date. The discount can be as much as 15% in some cases. Profit sharing. A profit sharing plan gives employees a share in their company's profits based on a quarterly or annual earnings. It's up to the company to decide how much of its profits it wishes to share. Contributions to a profit sharing plan are made by the company only. Employees cannot make any contributions to them. Lastly, pension plan. With the mobility that most people experience in the job market now, many people favor the 401k plan, which you can roll over into a new employee's 401k plan or an IRA when changing jobs. The 401k also gives you a bit more control over the investments than a pension plan. You may increase your contribution in a 401k plan, while with pension plans, your contribution is set. Pension plans they date back to 1875 when the first corporate pension plan was established in the United States at the American Express Company. Pensions grew in popularity because at that time most employees stayed with the company from the time they started until they retired. Today pension plans are much less common. Most employers are now offering the 401k plan instead. A look at pros and cons of company plans. Let's talk about the pros first. There are more pros than cons in my opinion. So some plans the employee is automatically enrolled into. The percentage you select is taken automatically out of your pay. Sometimes you don't miss it. It's basically you're paying yourself. Most plans allow employees to start contributing following their start date. No income tax on any contribution or earnings until you withdraw money from the account. Companies may have a match where they'll match up to a certain percentage. Anyone who is 50 or older is able to contribute more to their account in accordance to the IRS limits. You can access and manage your account anytime via online or by phone. You can select from a range of options to diversify your portfolio and also change the percentage of your contribution as needed. You can enroll eligible savings from previous employer, and if you leave the company, you can take the vested amount with you. About some of the cons. Okay. First, you can't take money out of your account unless it's for a hardship or employment ends. Withdrawing money out of your account, you're subject to a 10% fee, which is 10% of the amount taken out, and this needs to be reported on your income tax. Some companies may not have an extensive selection of choices in their plan. All plans are market-driven, so they can be doing well one day and not so well the next. Companies may not offer a match program. The company may have a 1-year wait period before you can enroll. So I would review the employer's plan prior to making your decisions, but clearly there are more pros and cons for company retirement plans. Okay. Companies have one place to access company information, such as forms, policies, benefit information. It may be called shared service sites, it may be called company intranet, it may be called HR portal, or some other name that they'll direct you to access this information. While it's mainly where an employee can access the information, most don't provide access to the new employee until they officially start. However, some companies may provide you with copies of important information prior to your start. You can reach out to your talent acquisition partner to answer any questions that you may have. The employee manual is where you can find out information on everything from dress code, time off, leave of absence, etc., and policies such as the ones that protect its employees. Also, important links and access to forms. Okay, so employee rights. Companies have policies in place to protect employees. They mirror both the federal and state laws. Employees have a right to not be harassed for discrimination against treated less favorably because of race, color, religion, sex, including pregnancy, sexual orientation, or gender identity, national origin, disability, age, or genetic information, including family medical history. Employees have the right to receive equal pay for equal work. Also receive reasonable accommodations, changes to the way things are normally done at work that are needed because of their medical condition or religious beliefs, if required by law. Expect any medical information or genetic information that they share with their employee will be kept confidential. Report any discrimination, participate in a discrimination investigation or lawsuit, or oppose discrimination. For example, threatening to file a discrimination complaint without being retaliated against for doing so. All employees have the right to make a complaint to HR if they feel they're harassed, discriminated against, not promoted due to any reason other than skill match. HR does an investigation into the complaint and follows up with the employee with the results in the investigation. At-will employment. This means in the state of Connecticut, a company reserves the right to terminate employees with or without cause at any time. The company's relationship with its employees is one of a voluntary employment, at will, entered into for no stated term or period of time. Neither the employee nor the company has entered into a contract of employment, expressed or implied. The employee is free to terminate the employment relationship at any time, as is the company. It is at the sole discretion with or without being shown. Social media. It's a huge part of how we communicate with each other. And in today's society, companies have developed social media policies to help strike the balance between the appropriate use of social media by employees, either at or away from work, and preserving the company's commitment to maintaining a productive and professional work environment. Social media policies and any related guidelines to a company may apply to all employees of the company who participate in any form of personal social networking or internet communication that may be accessed by the public. This is called social networking. Most policies state that the social networking includes, without limitation, maintenance or contribution to websites, blogs, photos, or video sharing sites, message boards, chat rooms, wikis, and any other online social networking or any online community sites. Some examples of social networking sites are Facebook, Instagram, Twitter, LinkedIn, YouTube, Flickr, Blogspot, and many others. Companies recognize employees engage in some form of social networking on their own time or while at work. The principles and guidelines found in their policies and procedures, and those reflected by the company's vision and mission statements, should apply to the employee's participation in social networking. This applies whether social networking is done at or away from work, and regardless of whether the employee is identified as an employee. Any social networking that adversely affects an employee's job performance, the performance of other employees, business interests, or otherwise adversely affects customers, suppliers, or individuals who work on behalf of a company is not permitted. Therefore, it's important that employees who participate in social networking understand what is recommended, expected, and required. While it's impossible to identify each and every potential situation, some companies have developed guidelines for employees. Employees are encouraged to report any violation of this policy to their immediate manager and/or HR business partner. Companies have the right to evaluate each situation on a case-by-case basis. Know and follow the rules. Employees should read the policy and other policies to ensure their social networking posts are consistent with such policies. Inappropriate posts such as discriminating remarks, harassment, or threats of violence, or similar inappropriate or unlawful conduct will not be tolerated and may be subject to disciplinary action. Employees shouldn't speak on behalf of their company when using social networking sites or speaking with the media. Employees who identify themselves as a company employee or reference the company in any way must clearly indicate that any views they express are their own and not necessarily those of the company. Employees shouldn't use the company name in their personal social networking identity in order to avoid giving the appearance of speaking on behalf of the company. Social networking is gaining popularity and companies are trying to get ahead of it. Depending on the company and the employee's position, it may allow them to engage in social networking during their work time for business-related issues. You should follow all provisions of the employees that work in customer-facing positions are encouraged to consult with their direct manager or any department-specific guidelines that may exist. Employees should be thoughtful about how to present themselves when participating in social networking. The lines between public and private and personal and professional are blurred when participating in social networking. Employees should remember that internet postings are visible to third parties and therefore the content of such postings can have an impact on the reputation of the employee and or their company. Respecting the audience and coworkers, an organization that values the diversity of its employees and customers. Employees are encouraged to be themselves but must do so respectfully. Thus, employees should avoid posting content that could be reasonably viewed as malicious, obscene, threatening, intimidating, or disparaging to customers, coworkers, or suppliers, or that might constitute harassment. It's normal for employees to disagree occasionally. However, employees should attempt to resolve their differences by speaking directly to each other rather than speaking through social media. Companies have employee relation processes that employees should seek out before they go and air their differences on social networking. Also, you should respect the privacy of the company's customers. Don't discuss any information regarding private, confidential information of customers and coworkers for any non-company related business purpose. Employees are obligated to protect the confidentiality, proprietary, and trade secret information of the company. Companies look for professionalism in their employees when using social media. Thank you for viewing our webinar on navigating your first day, understanding what HR does, and a better understanding of benefits. Thank you.